That's weird.
Hello, everybody. Welcome to today's episode of Trade the Chain. It is June 1st and super excited. Time flies, man. Can't believe it. We got a couple people missing today, but we brought in our heavy hitter, our bench guy.
Our bench players here. Our bench player, me.
Exactly. Monty's on vacation and Ryan is flying. So we brought in Rob from Digital Asset News. And of course, everybody knows CJ, our crypto analyst from marketrebellion.com. So thank you, everybody, for joining us. I hope you enjoyed the title. Been catching a lot of flack for the clickbait stuff. So we decided just maybe not put in titles anymore. I don't know how that's going to work out. What do you think about that, Rob?
So clickbait, everybody's favorite, right? And here's what it comes down to. What do you think clickbait is? This is just a general question for everybody out there. Put it in the comment box. But CJ, Alex, what do you guys think clickbait actually is?
Okay, it's something to draw the user's attention, yes, obviously, but
I agree.
Even more important, it's the YouTube algorithm. It gets just associated in that. It's for search engine optimization. And so I always like to say to even my favorite YouTubers, if you're viewing them and they have a clickbait title, don't hate the player, hate the game, because the game of the YouTube algorithm is to use ridiculous clickbait titles. It's just part of the game. And so we have to bend to the algorithm, at least in my opinion.
Sounds pretty good.
I mean, we would listen. CJ and I, when we started this show, I think we played to an audience of 25 people, our first episode. And we would continue to do that to this day. If 25 people showed up to watch, fine. We do this because we love crypto. We're in crypto, and we're taking the journey along with everybody else. So be it. And we just one day we decided to see what a title does, and a title does affect it. But we do this whether 25 people showed up or 2,500. So thank you, everybody, for watching.
Yeah, thanks. Hey, can I share my screen?
Yes, you can, sir.
So this was a couple of weeks ago. I actually asked that question. What's a clickbait thumbnail on YouTube? Because some people come in and like, this is clickbait. And I'm like, how dare you? They're like, no, it was a really good thumbnail. And out of how many votes did I get in this one? About 1,200 votes. And just like what CJ said, it's some people, they just think it's like pics that make me click. Some it's like pics that's not about the video, but the majority really just nail it. That's pics. It's a pic. It's a thumbnail that's deceptive. So like if Alex here is talking about anything that has to do with okay, let's say me, right? And I talk about, oh, here's a great one. I'm broke. There was one, people like, this is a clickbait title. How dare you? Like, God dang, I was broke. I was literally broke. I like all my money is gone out of my bank account. What are you talking about? It's clickbait. And then some people don't watch the whole video because they expect it to be like in the first 10 seconds, give it to me right now. And then it wasn't the first 10 seconds. This guy's a jerk. I hate him. And he's clickbait. And then that's it. They're gone. So I just think and you have to remember the last thing, which is this. Everybody's dealing with their own stuff internally. So maybe they just want someone just to yell at. That's what I think sometimes. So that's what it is. As long as the thumbnail itself is relevant to what the heck we're talking about, that's it. That's all I can say.
What should a person not do on a thumbnail?
A person shouldn't do on a thumbnail. Oh, I'll show you exactly what it is. The Home Alone face. Just don't. Somebody said, insert sausage here. I thought it was pretty funny. And, and like, I always look at those. I'm like, those are so goofy. I get what it is because it's this, there's a part of our brain, like this reptilian brain, that when you do stuff like that, it elicits a response internally. So people like, oh, it's just enough to cue them in, but it's just dumb. That's all I can really say. You know who does a great job of this? There's two guys, George from Cryptos R Us.
I feel like it's just the same face every time.
But I like him. I like
Stone Cold Stoic.
Yeah, and he's because I have him on the show, and I forgot to ask him about it, but he's always like this. And that's it. So it's him, and there's a guy named JRNY Crypto, and he's always just like, And that's it. That's all he does. And I'm like, that's a great thumbnail. That's a great thumbnail. You get your face in it. Cause that's like, that's what I see. Okay. So enough about thumbnails. What else?
Hold on. I have one last thing on the thumbnail. So this is a good time. Please, if you're watching, there's like 5 people watching right now. Answer this question for me. It'd be good for us to know. So we have one thumbnail that we've used on every single episode since inception, with the exception of one thumbnail that Rob graciously put together for us. Does it matter to you folks watching if we have the same thumbnail for the show every single episode, or should we be putting in all those Lambos and funny faces? Let us know in the comments, please.
Oh,
I think it's more, people who know you are going to watch because they want to see Alex Mascioli, but people who don't know you, those are the ones who you need to sucker in, to put it like maliciously.
Yeah. And you know what? So, and then Alex, here's a question for you. Like, how many people, like if you look in the analytics, how many of your subscribers keep tuning in to your show? Because
here's an interesting thing. 50% are people who are who are not subscribers. So they found it through the algo.
That's pretty good.
So that means the clickbait, I guess, does work. Not sure.
It does work. Mine actually is like 75% are subscribers who come back, which is pretty amazing. And then I was talking to George and he's like, you know what your problem is, Rob? I'm like, please tell me. He goes, your thumbnails suck. And so do your titles. I was like, damn, that sucks.
Your thumbnails are awesome, bro.
No. And he told me, he said, this is how to do a good thumbnail that draws new people in. I was like, I'm going to try that. So I'm going to try a different thumbnail, but it's very basic. Just look at George's thumbnails. That's pretty much what they're going to kind of look like, with a little digital asset news pizzazz. That's all.
All right, cool. I think the bottom line is if we generally talk about stuff that people enjoy, that's relevant, honest, and all that, they'll watch regardless if we had a thumbnail, a title, or not. So thank you again, everybody.
Oh, hey, sorry, Alex, real quick. Just a quick shout out. There is a celebrity here in the chat room. He is the world's best sentiment analysis person. And his name is Weston Nelson. Weston, hello. I saw your tweet. I thought it was hilarious.
Weston, the world's best crypto fundamental analysis. Thank you for joining us today.
That was pretty good. Yeah, we're all George. That's right, Angel. So what are we talking about today?
Let's start the show.
Let's start the show. Yeah.
All right. Listen, we won't even do plugs. Just do the disclaimer.
Okay, fair enough. Nothing should be considered financial advice by Market Rebellion or Trade the Chain or our special guest, Digital Asset News, Rob. Entertainment, informative purposes only. Do not listen to us in terms of financial advice. All of this is just opinion.
And please do go to tradethechain.com and marketrebellion.com/crypto. And of course, danteachescrypto.com. Please. Thank you.
Yeah, if you want. All right. So I know, Alex, you had a good article you want to talk about.
Yeah, I wanted to bring up this article in CoinDesk. I don't know, CJ, do you have it?
Yeah, I'll pull it up.
All right. We were speaking, Rob, and earlier, throughout the weekend, kind of keeping abreast of the market, and there was a lot of fear and uncertainty going on, a lot of people freaking out and stuff. But this article was interesting. Last week, we touched on the fact that we had the lightest expiries coming up for options this year. Here, it's showing us Bitcoin's long-term put option sees sustained demand as the price consolidates. So, I mean, just from the headline alone, CJ, what is your feeling with the market from an options purview, because it is an indicator?
Yeah, so I see this as a hedge, primarily for long funds. One thing that's really popular, or at least common, when I talk about like fund strategies, is you're long Bitcoin or your core assets going into the bull market. But for those pullbacks or for downward movements, you can buy put options on Bitcoin. So for instance, just a couple of weeks ago, you'd be long Bitcoin at 40,000 and you'd buy the 35 puts. So if price goes to 35, you're not only going to make back the option premium, but you're going to make a lot of money on that put option as well. So although you're taking that loss or that unrealized loss from Bitcoin, you have more money in the terms of, not only that option premium, but also the profit that you made for that option contract. So not only can you roll down and then say buy the 30 puts, or if you think it's going back up, now you have more capital that you can buy Bitcoin with. So sometimes it's not about, at least from my perspective, sometimes it's not about, calling the perfect top or the perfect bottom, but being able to have extra capital to accumulate Bitcoin when we see those rarer, lower prices. So I see the puts as mainly a hedging strategy for long funds and institutions who want to hedge in the interim, because it's like buying cheap insurance, especially when volatility is very low.
And it's covering your position as well, so you don't get blown out, and that's really important. Because one of the things that a lot of people do is that's easy money, or they feel is easy money, is they'll sell those premiums in order just to capture those to get that revenue in. Hey, I'll sell you a premium on an option. And then what happens is they're like, wow, I got tons of free money from selling a premium on the option, but the trade goes against them and they get blown out of their apartment. So
yeah, I'm not talking about LTCM because that's kind of what they did, or I'm not talking about selling like a naked puts. That situation, if you wanted to go short, you'd actually sell covered calls to collect that premium, which is great, in a sideways market. But whoever bought that call, let's say price goes up to 50,000 or something, they're going to make a boatload of money on those call options where, you're the one who's going to be ended up paying the bill. And since, upward price action is infinite, stocks can only go to zero, but they can go very high otherwise. So ultimately, when you sell those naked options, or you do anything, naked in options, you're putting yourself at risk for an unlimited loss. So that's it's very improbable, but it's just a difficult thing you can expose yourself to.
And just to clarify, folks, the reason it's called a naked option is because think of yourself without any clothes, you feel very exposed. And so that's how your position is. And that's why if you have a covered option, it's less exposed. Also, he threw in 4 initials there that if you are a finance or a market nerd and you want to read up on a good case study, LTCM was a Greenwich-based fund called Long-Term Capital Management. And back when it collapsed to the tune of about $6 to $8 billion in 90, when was that?
Late 90s.
Late 90s. Those folks actually created the first government bailout. At the time, it was on the energy sector, and they trade turned so far against this $6 billion hedge fund that the government actually had to come in and bail out for the first time this fund, because it would have exposed the energy markets, and it set up the framework for when the government had to come in and bail out the whole economy in 2008. So it's an interesting read. There's a couple of books on long-term capital management.
The book that really covers it well is called When Genius Failed.
Yes.
Recommended reading for anyone out there.
Yeah, and why? Because they were using the Black-Scholes model, which was an extremely innovative model for trading. So if you look up the Scholes model today, I believe he's a university professor at UCal Berkeley.
Yeah, they were doing spread arbitrage with options, and then the spreads went crazy and they took a big hit. But anyways, want to talk about Bitcoin and the crypto market?
Let's do it. Sorry.
I also want to bring a tweet to your guys' attention, because I think it kind of splits the market perspective into 2 different perspectives. So I want to see what you guys kind of agree with as well. So I'm going to go and lay that out after kind of a short analysis as well.
Yeah. Before we move on, let me just say 2 things. First of all, everybody who's here watching this great live stream, First of all, thanks for coming on. And then second of all, where can you get this kind of information? Like go to any other YouTube channel where they're going to talk about things. And it's all about, I mean, it's a lot of guesswork and feelings and maybes and this and that. But this is one of the few channels that I actually watch where there's like great history behind it. A lot of good as far as like traditional finance moving into the crypto sector. To me, like when I first met Alex and we did that article, he did the article on CoinDesk about banks and how they weren't going to innovate. I said, I don't know what's wrong with your channel because it's got so much great information. Why aren't people there? And he's like, I don't know. And here's just one of those prime examples. Like you can go to any other place and just find like the biggest fluff piece, like the Kardashian type of thing, and everybody flocks to it. But where you get the big information is some places that are really know what the hell's going on. So thanks. And the second thing I want to talk about was when you were talking about those puts and everything else, great lesson and everything. But do we know like how much that people are actually putting into these puts, how much they're actually, trying to hedge against it? Is like a dollar amount? Can we see something like that, or is it just percentage wise?
Well, you can gauge that by looking at the overall open interest. You can't gauge it though for a specific hedge, because if you ask somebody, why are you buying this put? Well, it could be for a number of reasons. Obviously, it's because they think the market's going down, but a large corporation like Microsoft could also buy puts on its own stock as a hedge going into the next couple quarters if they think things are going to be a little bit more volatile. You're getting at like the bedrock of unusual option activity, which is Market Rebellion's primary service. And the awesome thing about the options market is that there will be what we call like unusual orders. So you'll see an order come through on the book that gets flagged as like somebody just put down $250,000 worth of Tesla calls that expire by Friday. So we assume, in certain cases, obviously it requires interpretation and kind of feel, but in certain cases you can say, is that insider information? Do they know somebody? And so that's why we call it kind of following the smart money. You can identify those types of trades and then tag along to somebody who has been right before. And that's one of my favorite ways to trade options. You can really hide some interesting potential insider activity in the options market, whereas you can't really with the traditional market.
Crazy. And this is, again, where else are you going to get this stuff? Oh, before we go on, we've got a 1:00 over at my channel, but do you want me to push it back? Let's push it back.
Let's let CJ. I guess it's up to you, Rob. I mean, what are the guys, folks in the chat? We have Trinity Trading here with the three of us on Rob's channel for our pick of the week that we're buying. Do you want to push it back, or do you want us to finish our market analysis here first? We'll see what they say. But CJ brings up a good point, and that is also if you want to hedge. And so it doesn't have to be in the cryptoverse alone. You could be long hodler of Bitcoin, and you can hedge that position during market volatility by either getting puts on one of those stocks that are correlated, such as Mana or MicroStrategies, and that can hedge your position. So don't think just inside the crypto box as far as protecting your assets or even gaining some value.
I love the puts on those blockchain related stocks. I think it's been a great strategy, or selling calls in certain instances, but we can go into on a different day. But let's discuss Bitcoin here for a little bit, just from a technical perspective. We haven't had a lot that's changed really. Most critical level here for me, and what would get me in a long, is this 200-day moving average. Very strong resistance. One thing that's good for the bullish perspective is that from the bearish momentum, we are seeing a massive decline in volume. So when there's not a lot of price action kind of in the downward trajectory and the volume is decreasing, that means, the existing trend is kind of softening for the most part. So it's good to see that decreasing volume coming from the sellers. Another thing we have on the CCI, Commodity Channel Index, when we have that peaking up and crossing over the green line here as price continues to decline, that's what's known as a bullish divergence, and it sort of implies that the bearish momentum is certainly weakening. So we're kind of still in no man's land, in my opinion. I'm watching for a break between like 35 and then 41. Between
Mm.
our current range, between those two prices, it's very difficult to trade. And I'm going to wait and see if we get a breakout from either of those two levels, because as of now, Bitcoin's just very range bound. And, you have the high frequency traders trading in there and pretty much tearing up traders like me who are humans, just like piranhas. And yeah. Going over to the Trade the Chain community, still long-term bullish on the sentiments. Hourly sentiment getting back to neutral. It was actually pretty bearish this morning when I opened it up. Just going to refresh it one more time. But yeah, still neutral across the board. Long-term, still bullish. Moving to, all right, so this is what I want to ask you guys about, because this is what I find pretty interesting. Peter Brandt, great follow, great old commodity trader. Classic trader throughout the years. Definitely recommend a follow on Twitter. But this is a very interesting point that he brought up in terms of technical analysis of trading. And so the first point is that, have we even had a single instance where price does a 50 plus correction and does not at least lead to a 70% correction? So he's essentially saying, if we go down to 50, say reach a price of like 27, 26, then it's almost inevitable that we go down further 70%, which would be like 22K or something like that. And then the second point is, when we've also followed that correction with a new all-time high within 7 months. It's never happened in either of these scenarios. So Peter Brandt kind of making the case for the bearish price action in terms of technicals. And then we have Willy Woo, the on-chain analyst, who is kind of arguing back, saying all drops of that scale with long recoveries was from a starting point where price was overextended above fundamental valuation, but now price is below the fundamentals, and according to on-chain metrics is actually cheaper. So, and he says kind of the reason for that was because of the COVID dump. It really allowed us to fall far below the fundamentals and then kind of quickly recovered. So we have a kind of philosophical battle here between the technical analysts and the on-chain analysts. And I was wondering, where do you guys lie in all of this? And what do you think? Maybe it's both,
Yeah.
It's hard because I like Willy Woo and I respect Peter Brandt. And so, I think, there's a whole bunch of analysis around markets, and there's never one that's 100% right. You almost have to take a mix of a couple and find out what that blend is. So I actually look at both, listen to both, and then I come to a conclusion myself somewhere in the middle.
Yeah, I look at that, and I think we're all making history. Like, we've all been here for quite some time, right? At least 2017. Some people in the chat have been here since 2012, 2011. Which is crazy. But have we ever seen like a 50% drop in like a 2 or 3 day time span in cryptocurrency? That's unprecedented, especially in a bull market. So even for us who have like seen these massive dips, I mean, 2017 we had 4 or 5, and they range between like 24% to 39%, and now we see 150% in like 2 or 3 days or whatever it was. That's unprecedented. So to take a look and extrapolate that information to now, it's hard to say where things are going. But for me, and because Brandt's a trader, he's, TA guy, super sophisticated. He's been here for a long time. Willy Woo, like you talked about, on-chain analysis. When I take a look at these things, if I'm going to pick out my trading hat, which is very small, let me tell you right now, very small 5% hat, I would not do anything right now. But as far as like the investor side, I don't see any change in like I said, the fundamentals. There's nothing really going on. The people, and me and George talked about this, the cryptos are us. The people that just buy and hold for a long time, they're the ones that really do make out. So it all depends on which hat you want to wear. Are you going to be that investor and just put on that hat and dollar cost average? Or do you want to be the trader and play this choppiness? I don't know. For me, I'm just here to just invest.
So that's a good point, though.
Bitcoin.
That's a good point, though, because that it's trader and investor. It's two different terms, but it's like a time time frame thing. I think of it like a trader. Obviously, you're doing swing trades for like 2-week, maybe 4-week periods, at least in my experience. But then an investor, that's what we talk about when we talk about stock to flow and being able to identify when we're near the top and take sufficient profit at the top. Because just because you sell doesn't necessarily make you a trader. You know, Warren Buffett or various investors, it's great to be able to know when we're near the top and take profit. So then you have even more capital to buy even more Bitcoin over the course of the bear market. You know, that's always been my strategy. If you truly love Bitcoin, you know, you want to be able to try and accumulate as much as possible. And by calling the top, and not calling the perfect top, but just understanding how these halving cycles impact price through scarcity can give you a really good insight into locating the top within like a month, I'd say.
Yeah, that's why I'm gonna cover your pi cycle top information that you had on a couple of days ago, that indicator. So that was to me pretty fascinating. A little controversial, but hey, that's what we're all about, right?
Yeah, but you know, a little controversial, but proving to line up a little bit. So not that that means anything, but it has lined up a little bit, so it makes for an interesting story, as well as I believe CJ just came out and said it. He said, "Listen, I'm selling when these things when this divergence crosses again. That's it. That's when I have a feeling." So it's interesting. Everybody has to come up with their own signals.
Okay.
I guess we should hop over to digital asset news. I mean, we've done our analysis. I think the folks want to hear what we picked. I actually haven't even looked at what our scorecard is from last Trinity Trading, so we'll have to check it out.
Yeah. All right. So that's it, everybody. We'll see over. I just dropped in the
Hit that. Drop the link in the chat one more time for everybody.
And it's, hold on, where'd I go? Oh, I got it. There. Okay.
Plus, I got a 3 o'clock tea time at the Barbados Country Club. So,
First world problems. All right.
You know where Alex's priorities lie.
All right, folks, he dropped the link in there. We're off to Rob's awesome channel, and we'll see you over there literally in a couple minutes, and we'll tell you what we're picking for our